My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and put this all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. When will the pain stop? And that's all anyone really wants to know after an agonizing day, another agonizing day, where the Dow plunged 767 points. It was actually worse at one point. The S&P plummeted 2.98%, and the NASDAQ nosedived 3.47%, all that technology in there. And this is because of China's latest move to retaliate against Trump by turning the trade war into a much-feared currency war. Oh, we had some big milestones today, milestones that make me want to call the bottom. Yeah, in most other markets, that's exactly what I've been doing. But in this market, I think we need to be a little more cautious, especially because I fear an up opening tomorrow that will suck people in, only to revisit the lows we saw today and then some, and I'm not going to let that happen on my watch. We've reached a level where the downside volume to upside ratio was 10-1. Now, at 10-1, the late, great Mark Haynes always said you had to buy something. You had to buy something. You had to buy anything, or you'll regret it. Remember, he did call the Haynes bottom. It was a 10-1 call. I agree with the late Mr. Haynes. We've seen all kinds of stocks get thrown out, even though they have nothing to do with China. We're listening to all kinds of crazy theories about what could happen next in the trade war. People are beyond fearful. They are outright defeatists, and defeatism means they sell stocks. I am not a defeatist. I don't even like the talk. Isn't this exactly the kind of panic where you're supposed to buy stocks hand over fist? Not so fast. On the one hand, I do think you need to start putting money to work tomorrow, not at the opening. See what happens. Wait till it's down. On the other hand, I'm hesitant to tell you buy stocks aggressively. You need to be a little cautious. You need to be patient. Well, it certainly paid off so far, didn't it? Why? Because we've got a strange brew of positives and negatives here. So let's take them one by one, and we're going to start with the negatives. And we'll finish with the positives. I like that. First, where the heck are the stock downgrades? Where are the sweeping negatives from the big strategists? Where are the number cuts off the yuan devaluation? We're waiting for the other shoe to drop here. I'm betting many analysts who were paralyzed today will come out of their foxholes tomorrow. Now, some will reiterate their buy calls. Easy to do it at these lower levels. But others will be anxious to turn tail, especially when the stocks in question are still up huge and they can get out of Dodge without really hurting themselves. You want to know why I'm not pounding the table here? Say, let's just pick one. Let's pick the obvious one. Let's pick Apple. Looming downgrades. With all the trade turmoil, many analysts want to cut numbers, even after they just reported that spectacular number recently. After all, Trump's latest tariffs do directly impact the cost of the iPhone. Sure, people love Apple's products, so maybe a 10% tax won't be that big a deal. Who knows what gets passed on and what isn't. But you better believe it means something. I wish the White House had given Apple an exemption, because by slapping a tariff on the iPhone, they're just making Apple's Korean and Taiwanese rivals more competitive. Hey, make Samsung great again? The administration doesn't care. They don't think like I do. They want Apple out of China, period, now, end of story. So we need to see estimate cuts, price target cuts, and outright downgrades before we can get bullish on Apple or anyone else that's caught in the actual crosshairs of the trade war. The second big negative, Hong Kong. I mean, people are ignoring this. How can you ignore these images? Pro-democracy protesters have shut down the city. There's a general strike. They've turned violent. They're fighting, running battles with police in the streets. It's been 9 weekends in a row. How long can the Chinese government let this go on? We spent a lot of time talking about how President Xi can't afford to look weak in the trade negotiations. I think he'll feel compelled to crack down on Hong Kong for the same reason. Maybe he goes full Tiananmen Square on the city. If he sends in the People's Liberation Army, you better believe our stock market's going to get hit again. That doesn't mean we give up on stocks, but it does mean we got to be a little more cautious. Third negative, President Trump really does smell blood in the water here. He thinks he has the Chinese government on the run. You know, I think the trade war is justified, but Trump keeps getting increasingly inflammatory. The more he ratchets up the tension, the more stocks will indeed come down. And he's willing to accept that. Again, I agree that it's time to take on the Chinese. I just wish it weren't by angry tweets. Now, I have it on pretty good authority that the president wants all the tariffs on Chinese imports at 25%. instead of just some on 10 and some on 25. As he sees it, higher tariffs give us more leverage. So after this new duty, 10% import duty, goes into effect on September 1, I'm betting we'll see another round of tariff hikes. And that's especially true now that China's playing hardball, letting its currency drift lower versus the dollar to offset the impact of the tariffs. Now, it's easier to raise tariffs on all goods to 25 and then hold out the olive branch of cuts back to 10 if the Chinese offer to change their ways and mean it. Fourth, I think the Chinese government has misread the political situation here in America, totally misread it. They want to wait Trump out and make a deal with more friendly Democratic administration. But that depends on who the Democrats nominate. Elizabeth Warren's in second place in a number of polls, tops in Iowa. And if you read her position papers, she's even tougher on the Chinese than Trump is. Final reason to be cautious, the technicals. Even after today's brutal breakdown, we still aren't actually oversold. The averages have been flying so high for so long. Now we're just taking out a lot of levels of the downside, which means there's no real natural place to land. I'm waiting for the proprietary S&P oscillator that I paid for and I followed to hit -5. That's a classic sign that we've come down too far too fast. But we aren't there yet. In fact, we're really at -2.7. That's not good. So if we're waiting for all these shoes to drop, why even bother to try pick stocks at all? Why am I still saying you should get involved and start buying tomorrow? Simple. Because bond yields, which everyone's saying, ooh, so scared, they've plummeted. Right now, the benchmark 10-year Treasury is giving you a 1.73% return. If you're an investor who wants income, and a lot of people do, dividend stocks are pretty much the only game in town. So there's a whole cohort of 3% yielders that's become a lot more attractive here. Stay tuned after the break for a list of my favorites. For now, all you need to know is that interest rates in the rest of the world are so low, you better believe ours can go lower. If only from pure panic they'll go lower. People flee into bonds as a safe haven. That puts downward pressure on those yields. Plus, here's a little reality check. Overall earnings have been quite good for all sorts of companies, both domestic and international. We just had a fabulous quarter from LivePerson and Afria, the pod company, and both are on tonight. You'll hear the stories. After the bell, we got a magnificent quarter from Cramer Fave Take-Two Interactive. That's Strauss-Zelnick. That stock deserves to be higher. Sure, the stocks with overseas exposure might have more downside, but the domestic names are buyable. And I think a lot of them are buyable right now. Again, on a downtick. Don't pay up if the opening's up, please. I'll find you. Don't forget, the president is a mercurial man. If the Dow Jones Industrial Average keeps plummeting, first he lashes out at Fed Chief Jay Powell's stewardship. I mean, that's an easy one. I hear Jay. Or he might leak some positive chatter about the trade negotiations with China. He just needs to tantalize enough of Wall Street to make the panic stop. That could happen tomorrow if we were open down a lot. I mean, why not? I mean, what does he have to lose? Meanwhile, tons of stocks are down dramatically. Many are already down 10% from their highs. That's usually where I start to like to buy. Emphasis on the word start. You want to buy your shares gradually, in stages, so you can back up the truck if the market keeps rolling over. Not yet. Remember, the United States is a service-oriented economy, not a big exporter. So there's plenty of domestic stuff that works here. Of course, everything is obscured by the collapse of FAANG plus Microsoft in today's trading. But that's what panic looks like. Bottom line, I have to tell you again, nobody ever made a dime panicking. Take a deep breath. Keep your head. Remember that stocks get cheaper as they go lower if they're quality companies behind them. If you slowly buy the stocks of companies with great fundamentals, you'll be in good shape when the smoke clears. Am I promising that? Well, pretty close to it. Let's go to Glenn in California. Glenn.
How you doing, Jim Cramer? Hey, I'm a big fan of yours.
Thank you very much.
Yes, the reason why I'm calling is because I own Microsoft stock and everything, and I know Microsoft is down at this moment. But Microsoft is targeted to hit about $153 a share. Where do you see Microsoft in the next 6 to 12 months?
Well, let's understand this stock has had a remarkable move. Okay, it's a big cap stock, the biggest, and it's only down about 10 from its high. Let it come in. It is an expensive stock at this moment, but it's doing quite well. My take is that Microsoft is probably the best of the large caps to ride it out. They have very little China, and they're valued much more rigorously than, say, an Amazon is valued. That was a brilliant quarter. Satya Nadella shot the lights out. That's one to buy in the 120s, and I'll be pounding the table when it gets there. Let's go to Brianne in California. Brianne.
Hi, Mr. Cramer. Thank you so much for taking my call.
Of course.
I had a question regarding the tariffs and the federal rate cut, and what kind of effect that will have on Nucor. You had the CEO on not too long ago, and I bought some stock, and it's not been doing so well. So I'm wondering if it's a buy.
Yeah, no one. You don't want to cut and run Nucor. Nucor is a 3% yield. It's got a great balance sheet. It's going to be the winners, last man standing. I know there's a lot of talk about recession here. I don't like that. I don't think it's reasonable. Not with employment the way it is. Not with the way the country's doing. Nucor is a great American manufacturer, maybe among the best, along with Boeing. I still put Boeing in that category. So I think that you're going to be fine. I actually think that below 50, you buy some. Let's go to Steve in California. Steve.
Booyah, Jim.
Booyah.
I've been watching since Kudlow and Cramer days.
Oh, man, you know I was against China and felt very strongly that we should have tariffs. Larry was the free trader. Isn't that something? What's going on?
I know. My stock today is Biomed. I am down 30%. The stock cut a bid today in a terrible market. Should I sell it tomorrow, even if it continues to move higher, or should I hold it here?
You know, I really felt that was a terrible overreaction last week. And ABMD, which was, by the way, the stock that's up the most from S&P 2000 to 3000, I guess it just felt like it kind of had it coming. I personally think that you did the right thing. This was the right level I think this was the right level. And I think that saying that, I'm not sticking my neck out that much after what happened last week. All right, on the worst day of 2019, it's important to remember to take a deep breath. And I'm not a Zen guy or a Zen desk guy for that matter. You could be doing some buying here, but remain careful. Don't buy a stock that's up. There's an up opening, ignore it. Let the market come down. Do not be over anxious on Mad Money tonight. On an agonizing day, I'm here to keep your eye on the prize. I'll go through the rubble and find some opportunity for you. Then I want to focus on something positive. Last week, Afria reported a true blowout quarter that sent the shares up 41% in a single session. I want to know what these guys are doing right. And I've got the exclusive with the company's top exec. But first, I'm opening up the phone lines, Cramer. We're going to get through this together. We always do. If we got through 2009, this could be child's play. So call me and stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.